Welcome back. Great to have you with us on here. It's time for an update on all things personal finance. Mark Richardson, investment advisor, thanks to our partners at Forsyth Barr. Hey, so where are the opportunities for 2026?
I suppose that's what we're starting to look forward to is, how's the next year looking? This year very much driven by those. And depending on where you sit, if you think that there is no tech bubble and things are going to continue and those companies start to continue to deliver on, the revenue promises, I guess, then just normal, just everything just continues as it is. Otherwise, where are there some opportunities? Sort of, just rotate out of those, and we've seen a little bit of that over the last wee while. So may as well look at that and go, okay, where do we see some good value? Where do we see some good opportunities next year? And I'm going to say, first of all, no one has a crystal ball, but
why not? Come on, mate.
Well, you make educated predictions, don't you? And you put your money where you. The playing field is looking good for some growth. I think the New Zealand market is looking quite good. The New Zealand market responds to a decreasing interest rate cycle. Well, arguably we could be at the bottom of that. But importantly, it also responds well to a stabilising economy and then a growing economy. And in the last reporting season, see some positive results, a lot more positive results than we saw the prior. And we're hoping that with those green shoots and those improving, economic reports from our main businesses, we will see some life in the New Zealand share market, which has really gone nowhere over the last 5 years. So an opportunity may be there next year.
Okay. What about Europe? How are their markets looking? Yeah,
Europe's been a little bit out of favour. It is obviously quite fragmented as one region. But there is some valuations, and the multiples of some of those companies are a lot less than some of the multiples. So basically, what you're paying for what they're delivering are a lot more affordable markets than in the US market. So some real genuine opportunity there, as some interest will go that way. And we at the moment, we feel that geographical diversification is a good thing to put into your portfolio and look for some of those markets over there, which have not been great over the last wee while, to actually start to see some life. So hopefully next year and beyond.
Talking about your portfolio, I mean, how many eggs do you put in that basket versus staying in New Zealand or shifting to tech stocks?
Yeah, we have a sort of what we call a tactical allocation, and that will have a certain amount of percentage in New Zealand, certain in New Zealand and certain international within your basket. And let's say if it was a classic sort of New Zealand growth portfolio we put together, we'd 40% in international, and you might have so of that 40%, you might have let's say 30% of that 40%, or maybe not quite half in you might have a little bit more than that. It just depends where you see the opportunities.
Okay, and so would you be advising me to be looking to the US markets? I mean, how attractive is that?
Look, the US market is still the US market. Yeah. And whether you think there's going to be a continuation of US exceptionalism or not, there are opportunities in the US market. So what we would call value investing, value stocks. So companies, and the classic is your healthcare, which has underperformed for quite some time. These are great companies. If they start to see some life, if all of a sudden people get a bit more nervous about what's going on with the big tech stocks, and let's face it, the S&P, like the S&P 7, with the, driven by those big tech stocks. If money starts to rotate into those other areas where people feel they are undervalued, where you can pick them up at good prices for future growth, we could see money cycling out of that top 7 and actually being spread wider amongst that market. But you've got to be really careful. It's called a value trap. So you look at something and you go, gee, that's good value, that's meant to be a good company, that's a big company, I've heard of that company, it's got a cheap share price. Well, it may be cheap for a reason. So you need to scratch beneath the surface just a little bit to decide, okay, has the market neglected a very good company which will deliver, or is there a reason?
So that happens quite a bit, does it, where you have this value trap when people, pour everything into that and then make a major mistake? Yeah,
because there are some fundamental issues with that company, and that's why it hasn't been performing, and that's why it is likely to take advantage of improving economic conditions. Or is it a company whereby the fundamental it's been ignored, it's unloved, and at some point in time the market's going to realise, hang on, why aren't we in this? That's what we should call value. And I think next year we might see a little bit of money rotate back in towards value, as opposed to we've seen it dominated in those very few growth stocks.
Okay. A bit of a pivot. Commentating the tomorrow, West Indies.
What
are your insights?
Well, it should be a wicket down there at Bay Oval. A chance to play another spinner. I'm hoping that AJ Patel gets a roll. It's actually been a year of the old forgotten. Actually, it's a little bit like the markets.
It is.
Some old forgotten boys coming back into the team and actually then all of a sudden performing. So AJ Patel might get a roll on a flatter wicket. So it may be a little bit harder to actually get the 10 West Indian wickets that New Zealand require. But I still see New Zealand going into as heavy favourites.
Okay, Mark Richardson, really appreciate you coming in, being with us on Herald Now. Thanks to our partners, Forsyth Barr.